Well, g'day there everybody. Thanks for joining me on this pre-market update as we transition into Tuesday's day worth of trading. On Monday, yesterday, we saw the US dollar index push on up very close to our bullish trigger above the swing high, which we put in late October. We didn't actually trigger above it. We did, however, put in potentially some form of an intraday reversal. On Monday, we were left with that of a shooting star candlestick. It was looking relatively favorable. However, once again, we did put in that little reversal. So it looks as though potentially we may not see the breakout this week. It does look as if this candle crystallizes a little bit. We do have, again, some hangman candlesticks. We may actually see the US dollar pull on back down to this lower area before we see the back test of this potential inverse head and shoulders. If I zoom out and show you this pattern, this has been in the works for about 4 months now. We're getting, or what we have done last week or 2 weeks ago, is broken above that neckline. Let me just illustrate this for you. We've got the left shoulder, the head, and now the right shoulder under construction. Generally, what you look for in these patterns is to see the breakout and then to see the back test again of that pivot. This is coming in just shy or just below 94 on the US dollar index. There is a trade opportunity. This is under UUP if you want to take the trade. However, as at the close on Monday, it looks as though once again we may see that pullback back down into these lower areas. However, I'd still keep this trigger open and think about longer dated options, most likely into the first quarter of 2018, to allow yourself enough time if, of course, market noise takes hold and we do see even a little bit of a head fake and then a pullback and then the continuation above this first entry here at 95.22. This is a very interesting trigger, because if we start looking at gold and silver, yesterday they did put in some very short-term reversal signals. This is what we call a one white soldier, a very strong bullish candlestick, and it did occur on relatively strong volume as well. So it is coinciding with a little bit of short-term weakness on the US dollar, although of course that pattern is what we consider to be a stair-step consolidation, which looks to be, again, overall continuing in the bullish direction. When it comes to gold and silver, it looks as though we may see a little bit of a bounce. So if the US dollar does pull back down to that 93 area, we should see gold and both silver come back up and most likely retest the swing highs, coming in at about 124 on gold. And also, if I continue the discussion, it looks as though silver is in some form of a symmetrical triangle. I don't really like it all that much, the pattern. I think it is going to be that of a false pattern. But you can see also this one white soldier with pretty decent volume as well. So this is coinciding with a little bit of short-term weakness on the US dollar. Pay attention. I'm not directly trading gold and silver. What my impetus, what my trigger is going to be, so to speak, what my conditional order is going to be to actually get into any of these commodity trades is going to be the direction of the US dollar. So it is very important that you understand just what is happening with the US dollar. We have been putting in some very strong positive or bullish divergence. You can see this has been happening really since the beginning of August, if not late July 2017, when we started to establish the left shoulder of this inverse head and shoulders. And again, this is the perfect type of textbook sort of back test, which is also coinciding with the exponential moving averages, which have all flipped now into the positive sort of direction, that of a bullish trend, which is underway. Yes, we are still below that long-term 200-day simple moving average. You can see on my screen it is this sort of teal color here, but we have definitively broken above this positive 100, or at least this sideways moving 100 simple moving average. And again, that may allow for some form of a back test until we rocket back up and test this 200 simple moving average. So there's a lot going on with, of course, this intermarket relationship. I am very excited about it, but we're still yet to break above our definitive trigger here at 95.22. I just wanted to give you a quick update on that. Now, again, transitioning into a couple of our stocks, Tesla is doing everything it can to come back up and back test this open window. It's going to be interesting whether or not we can do this. And again, I spoke about the tradable opportunity over the weekend in that pro class when it came to that Tesla trade. Netflix on Monday, pretty much unchanged. We closed up 12 cents, but it did leave us with another doji candlestick. So not a whole lot to talk or at least report to you with Netflix. IBM, you can see also we spoke about this over the weekend. We had our stop at 153.52. Original entry was the shorting of the gap here at 155. You can bring this down to the high of Monday's candle. We've now interacted with our green box. So I am expecting that IBM is going to hold anywhere in this green box. I can bring it down slightly. Really, this gap down to this one doji candlestick prior to earnings is where we expect IBM to sort of fizzle out and then potentially show us some early reversal signals, which is going to allow it, of course, to come back up all the way to 162. It is not going to happen obviously this week. It probably won't even happen in the month of November, but if we put in a definitive bottom anywhere in this green box, well, then this is going to be a trade which may pay us off towards the end of 2017 if we rally back up and try and at least come back up to that relative swing high. So this trade is under construction at the moment, and I do like that IBM trade very much. Goldman Sachs, it pulled down 91 cents. We still haven't seen a definitive breakout above either of our triggers at this particular point. The same is true for Google. It's still under construction, but it's doing everything it can to float on up a little bit higher. CVX, this is something we spoke about over the weekend. It's coming back up to fill this red box, very similar to that of Tesla, which is what I was speaking about just a couple of shares earlier. So think about that when it comes to CVX. It's not ready yet, but I am liking that construction. COP, I can say that I am personally not in COP, but today, yesterday, it closed up another 71 cents from our breakout trigger at 52.60. So that trade is working very, very nicely if you are positioned in it. Caterpillar, still holding above those rising exponential moving averages. This is getting set to move. I think it's going to continue its advance up to those higher levels. My target is 158, and I've been speaking about that for a number of months. Baidu, again, trying to come back up and refill or at least close this open window. There is no trade on Baidu at the moment unless we crack 232.06. So be patient with this one. It's still under construction. Boeing Airlines is still holding above those rising exponential moving averages, very similar to that of Caterpillar. And also, a lot of these trades are also working in conjunction with relative Bollinger Band squeezes as well, which is saying that obviously we're in a low volatile type of period at the moment. And we are on the precipice, however, of breaking out with a surge of volatility one direction or another. It's best to remain neutral. However, if that underlying trend direction is sort of overwhelming, say for instance on the bullish side, well then generally these Bollinger Band Bollinger Band squeezes, they will break in that in that sort of underpinning direction, which will be to the upside. So think about that as well. Amazon is looking healthy. It's almost breaking out. We identified this candlestick pattern. I love it. It's looking as though we are going to flinch above our trigger. So think about this trade too. Also, Apple triggered or touched that entry at 174.95. Now that we are starting to see those white candlesticks, or one white candlestick develop after the earnings candle. This was dating back to Friday last week. We should again over time see Apple break above this and continue to trade. My only caution with this is that the exponential moving averages are still or at least still a little bit far away. The 10 exponential is still priced at 166 and we're trading at 174. So even if we do get a break above it, I think we are going to have to short-term move sideways and allow these to catch back up to price before we see a true breakout above these respective highs. Now, again, the markets are looking quite good. The S&P 500, it was up only 3.5 points or 3.3 points. It's still giddy above these breakout triggers. The same is true for the Dow Jones Industrial Average. If I bring up, you can see we've got another spinning top candlestick, which is developed on Monday. It looks as though, again, traders are a little bit tentative to trade above these swing highs. I don't have any trades set up on the Qs or on the diamonds, or even on the SPYs. We've taken advantage of this really dating back to more so August, where we started to see in September the breakouts of their respective resistance areas. However, what is really comforting to note at this particular point is that, look, the NASDAQ is continuing. That's obviously being aided by that of Amazon, Apple, and most likely Google once that breaks above its respective swing high. But also if we start looking more so into the transportational average, I really like this chart as well, because what we've done is we've broken above the swing high. This was dating back to July 2017. We've spent about a month now in consolidation, which is fantastic to see. We're still holding within our green box, and this is the back test of the breakout pivot over here. So this is going to act as new support, which is what I expect it's going to do. And of course, what we're seeing the back test of this rising 50 exponential moving average. This is also coinciding with an ADX that has reset during the month of October. So as we have been moving sideways, if not slightly pulling back, the ADX has reset. It's ready to move again. And the CCI, although it has flinched below that positive 100 reading, it is still above that neutral point of 50. So this is still looking good to go. And I think it's only a matter of time that we see a real breakout above this 10,000 trigger on my trade right now for the transportational average. So across the board, the markets are looking relatively healthy. The Russell 2000, this has been pretty much quite dim over the past month or so. It is moving sideways, but we are seeing, of course, price being supported by this rising exponential moving average. And this is also coinciding with the ADX coming back down. And it's pretty much back down at that flat line, that 20 area where we would look for the ADX to turn up, depending on which direction this market chooses to break. So a pretty decent week's worth of trading upcoming. I am very excited about it. I am sort of prioritizing my attention towards that of UUP or the US dollar, because that's going to unlock, of course, the direction for gold and silver. But as I've already mentioned at the beginning of this recording, it looks as though we are going to see a little bit of strength flow into gold and silver. We saw those one white soldier candlesticks develop during yesterday's session on pretty decent volume, and it did look as though as we saw a little bit of an intraday reversal take place on the US dollar. It's not the biggest of reversal signals. It pretty much is sort of an inconsequential candlestick on its own. And it is a little bit bifurcated at the moment because, again, this is taking the formation of a stair-step continuation pattern. All that we simply haven't seen yet is the true breakout above 95.22. If this happens, look for weakness in commodities and potentially the trend reversal of the US dollar, which has been relatively bearish since the beginning or really throughout 2017. We opened up at about 103.50. We got as low as about 91. And here we are trying to strengthen a little bit and reverse the trend just below 95 on the US dollar index. So on that note, everyone, if you have any questions, please email me, success@pivotpoint-trading.com. I'll be back with you later in the week for another market update. All the best. It's James signing off on behalf of Pivot Point Trading. Goodbye.